Welcome back. You're watching News Now on ET Now, and let's switch to earnings, where from the Nifty pack, L&T has come out with its numbers, and this time the numbers look quite decent, a tad below when we compare it with our expectation, while the margins are upbeat in line to what we were expecting. But to know more on how the numbers are looking, and we were tracking the management's order book guidance for FY22, have they actually managed to meet that? Let's know more on that, and let's connect with Avan. Avan, how are the numbers looking to you, and what's your sense?
Yeah, Shishti, as you mentioned, in terms of the headline numbers, at least the revenue and the PAT number, it is a little bit below what the street was penciling in. So 3,620 crore rupees is what they've delivered versus 3,292 crores on a year-on-year basis. We were working with a slightly higher number of 3,788 crores. The top line growth has come in at 52,851 crore rupees versus 54,395 crores, which was the ET Now estimate. EBITDA at 6519 crore rupees is a little bit lower, and the margins in line, you could say, actually at 12.3% versus 13.2%. The company has bagged orders worth about 73,941 crore rupees in the quarter gone by, and that is pretty much in line with what the street was penciling in. Close to 70 to 80,000 crores is what we had expected. And at the group level, they've secured orders worth about 1.92 lakh crores. Just as I break it down in terms of the earnings, let's take it to Arafat Saiyed, who's joining in from Reliance Securities as well, to give us a take on the earnings. And how are you looking at the headline numbers, the kind of order bookings that the company has completed in the quarter gone by for L&T? How does it stack up versus your expectations?
Yeah, hi Avan. Very good set of numbers from our side. We expected revenue order inflow up around 55,000 crore, and the company beat on the huge margin. Similarly, for the full year also, we are expecting order inflow up close to 1,70,000 crore odd numbers, and the company beat around 1,90,000 crore. And revenue also, it's higher than our expectation. We are penciling close to 51,000 crore of revenue, and the company beat on that. Similarly, in terms of margin, we are expecting margin close to 11%, and the margin is about 12.5%, 12.8%. It's again a strong beat. And in terms of, so I guess it's a beat on all the numbers, and then the strong uptick on all the numbers and tick on all the numbers. So we're expecting good numbers, the stock to follow positive uptick tomorrow morning.
Taking a look as to what the company has delivered on in terms of their individual sector performance, infrastructure revenues are at 29,727 crores. That's up 13%. Hydrocarbon has come in lower by 3% on year. The power segment revenues at about 4418 crore rupees. That's seen a growth of about 39%. There's been execution of a lot of major projects in the power segment and a healthy order book there. You've got the heavy engineering segment that posted revenues of 869 crores. That's down nearly 13%. And defense, well, it was expected to be a little bit weak this time around. They've recorded a decline of about 21% on expected lines. How are you looking at the segmental performance? Do you think that there'll be any word in terms of the guidance from the management going forward, Arafat?
Yeah, again, defense, although it's a small number from the L&T, it's currently on 4% of revenue. So as we discussed, it's a down 29% YOY. And that's a bit worry on that front, because huge defense happening in all over India. But I guess the main thing is to watch out that the infrastructure revenue, that is very much in line with expectation. And again, we need to look at how it's a all-time high number in terms of order inflow and order book. So we need to check out how this big number can be in FY23. And again, especially what's happening on the international middle side. I guess the huge capex will be increased as the oil price already crossed 120. So the L&T contributing almost 25% of order book from the Middle East. So we need to check on that, how the capex planning over there, and also what's happening on India per se.
Okay, so we are waiting for the management commentary and the guidance they will be coming up with for FY23. But with this, Avan, thank you so much for joining us and breaking down the numbers for us, and Arafat for helping us with your first take. But with this, it's wrapped with this edition of News Now. Thanks for tuning in.